It's Notional Ed, and it is Sunday evening, March 30th. Just popping in, do a little bit of quick homework for the week and wanted to share a few things with you guys. Let's take a look at the economic news first. We're going to go with the 2-star reports. There's a lot more mixed in here, but it just takes too much time. So on Monday, we have at 8:45 Central, we have the Chicago PMI expected to drop a little bit. Dallas Fed Manufacturing Index, here, put it on. On Tuesday, we have the Institute of Supply Management PMI. There's some subcomponents to this that I just looked at in the 1-star component that I think are worth noting. Some of these have some pricing components and new orders, and that can be relevant to what the market is looking at right now. Back to things. And so we have the Chicago PMI slated to be at 50. Anything 50 or above is expansionary, so we're pretty close to flat. The JOLTS job opening expected to be down a little bit, still over 7 million jobs. Manufacturing employment index look to be a little unchanged or so. On Wednesday, we have some factory orders with ADP weekly employment change, a little bit of gas and oil information, and a Fed speaker. On Thursday, we have the balance of trade, imports and exports, jobless claims, the ISM services component. Manufacturing is a small component of our economy compared to services. I think it's about 17% of the economy. And services is the rest, so it's huge. And that's expected to dip a little from 53.5 to 53, still expansionary. 2 Fed speakers. And then on Friday, we have the big employment report. Non-farm payrolls expected to be at an increase of 80,000 versus prior 151. The employment rate ticking up 0.1%. Average hourly earnings looking to be flat month over month and year over year, and the participation rate unchanged at 62.4%. And then at 10:25, we have Fed Chair Powell speaking, and then at 11:45, 2 more Fed speakers. This could be fireworks, especially following the employment report. So, not saying freak out, but do be aware when these reports are coming out, so you don't trade right into something that you don't really have a decent grip on. Okay, let's move that aside. And let's look at some quick action in the market. Look at some expected ranges. Let's go right to the S, which is okay. So we have ES kind of topping here. We are down 32 points right now at 55.91. We had a low of 55.74 earlier this evening. ES was down 115 points on Friday until the close. After the close, it fell 20 more points, and we are down 32 more points. So that's 52 points of downside action on the market, all things equal, compared to where it closed, or about 52 points below fair value, to use that lingo. ES had popped up above the 200 last week and then failed it. Expected range for the week, a little over 5,700. We're at 5,590 right now, and on the low end, about 5,500, 5,496. Looking at SPY. SPY closed at 555 on Friday. It's at 552.5, so it's down about 3 points. It's down over 2% on Friday. It too had one of these big whoosh downs from the highs and went above the 200 moving average and failed. We're back down at expected range 566 to 544. Excuse me. Let's look at some mag stocks real quick. Let's look at Amazon. Pardon me for that sneeze. Amazon expected range up at near 200 for the week at 199.5, 186 for the low. closed at 192.70 and it's trading at 190.45. So about a little over 2 points, 2 1/3 points of downside action. NVIDIA closed down 1.76 on the day. It is trading down almost 2 1/3 points right now. Its expected range is 115 on the upside and about 104.5 on the downside. It's below its 250 moving average also. Trending down still. Here's a support from the March lows at about 104, which is the low expected range. So this low here literally overlays this expected range here. Let's look at Meta. Meta got obliterated on Friday, down 4.29%. Closed at 576. Is trading at 566, down 10 more points. And let's look at its expected range. Meta bounced off its green 200 moving average last week right here, went above the expected range and then fell below it on Thursday and crashed back down to the bottom of the expected range on Friday, closed right at it, interestingly, and it's a 200-day moving average. It's below it now, but that is about the 200-day moving average where it closed Friday. Upper end of the expected range, just below 200 at 599. On the low side, 554. See what happens there. Pointing down for the expected ranges again this week. A lot will depend on what happens with all those reports we just went through. And don't forget Tariff Day. Tariff Day is Wednesday the 2nd. So let's not forget that day. That's something we need to pay attention to. There's bound to be some chitter chatter back and forth as that approaches. And who knows, even afterwards, the way things seem to play out. Looking at Google, it's below its 200 moving average here where the green line is at 176 and below its 50. Both of those are overhead resistance. You can see a nice downtrend line is in place off of last week's low, which we can call it here. It's failing either way. It's at a recent low here. The expected range 161 on the upside, 150, 151 on the downside. And Google is kind of weak here. It broke these resistance points Friday. Here's the next area of support at about 148, which were the September lows of last year. Also, pretty much the opposite low. It's the lowest secondary low. Okay, that's it for Goog. Let's move on. Microsoft. Similar low. Here's the 200, here's the 50, it's below it. It kind of raced up to not even its expected range and then broke back down. High point 389 for the week, 368.60 for the low. And it too is just in a magnificent decline for the Mag 7. Tesla topped out at 488 up here in late December, crashed all the way down to 220, popped up to its 200 moving average here at this green line and above its expected range on the week, held it until Friday, closed just below the expected range, and here's the 200 here, 50 here. Those are overhead resistance. In fact, look, this week's expected range, 280, 262 on the upside, which is right around where this 200 and 244.5 on the downside for Tesla. Apple. High was 260. Hit a secondary high here. February. Popped down here. Apple made it to the top of its expected range last week and failed badly like everything else on Friday. Here's the green and the yellow. 250 moving averages. They are overhead resistance once again. And again, look how cleanly some of these things are resisting at these expected moves. Shows the power of options. This week's expected range is 224 on the upside, which strangely is exactly the same as last week. Very strange. Rarely do I see that. On the downside, 211.61, which was like near last week's downside, but that's where it is here. This blue line here is just a channel off of this. see. Wow. Let's go to lesson 8. ETF, called the whole ages for old things that have been around for a long time. It holds a bunch of semiconductor stocks, and you can see they are in sell territory as well. Here is the August low, which is also right at the expected range for this week, 204.76. On the downside, about 220 on the upside. We closed at 212, we're at 208 right now, and it's up there. So let's see. We'll take one more quick look at bonds. Bonds are up today, 19 ticks on Friday. Excuse me, on Friday. Today it is. Oh, it's up 19 ticks right now. This is live. It was up over a point on Friday. You can see TLT was up 1.38%. It's a proxy for ZB. So despite the stronger than desired inflation on some of the reports, bonds actually rallied on Friday, which is a dichotomy that sometimes these bond things do crazy things, as you all know. Here's the expected range for TLT on the week, 91.4 on the upside, 88 or about 89 on the downside. And we'll see what happens. It's at 90.82 right now, so it is up. Bonds are rallying in price, yields are falling as the market itself is not acting very happy. So that's all I have for now. Have a great week, everyone, and I'll be in touch. You be in touch as well. Feel free to email me at the email below. Leave any comments. Be glad to reply back. Take care, everyone.